Hello again, friends. Well, somebody should call Peter because Wednesday's trading day resembled an absolute bloodbath for many of the apes out there, with many meme stocks taking an absolute beating. Early trade was particularly brutal for many of them, including many that I have covered on this channel, such as MRIN, Clean Energy, and Workhorse. Some notable exceptions to this negative trend were Newegg and, of course, the topic of this video, Exela Technology. While Newegg's moves were more impressive yesterday, Exela Technologies, ticker symbol XELA, still posted an impressive 22% gain, closing at $3.29 at the end of the day, and it was the only stock that I made some money on last night. So largely for this reason, this will be the focus of this video. I want to present a bit of an analysis of what's been going on with the share price lately with Exela, and looking at some of the shorts data, which seems to have got much of the retail investing sector into a bit of a frenzy, and try to get a bit of a picture of the outlook of this company. Naturally, this video contains my own opinions and should not be viewed as investing advice. So let's get into it. To start with, Exela's Wednesday rally appeared to be interestingly immune to the general sharp market declines that were seen at around 10 AM across all of the stocks on the back of some economic realizations around US job data. So we're looking at this little patches here. So they stayed relatively flat, where the S&P 500 took a nice sharp dip before having a V-shaped sort of recovery back up. Perhaps given the fact that Exela is in the industry of business process automation, it may have actually made their systems somewhat immune to the Wednesday job news, which is giving market suggestions that business growth may not return as quickly as investors or businesses would like, on account of businesses not being able to get the labor resources they need. But that's another topic and not really the focus of this video. As can be seen in yesterday's trade on this 15-minute chart, there was a fairly steady increase in the share price once the market started to bounce back at about 11 AM. So starting from down around here, we see a nice sort of general trend upwards here in the share price throughout the day. Keep in mind, my charts have different timings because I trade from Australia. There was a strong increase in trade volume towards the end of the day, which was notably in a bullish manner, as indicated by these green columns over here. We can see this bullish sentiment is supported with the tracking of the relative strength index across the middle of this image, which is this indicator around here. The RSI pretty much clung to the 70 mark for the day, indicated by this straight line. There is putting a little marking on here. Interestingly, it did finish the regular trading session in overbought territory, which may account for the slight tapering of the stock price in aftermarket trade. Looking at the last few days of trade, we can see that there has been a bump in the Exela stock price starting here. This came on the back of the news that its digital mailroom platform had gone live. While this was good news for Exela as a company, there has not been much news around projections for how this is going to impact revenues or profitability of the company going forward. So there hasn't been any data to base recent share price increase around. It's purely been on the news headline. Looking at the RSI trend for this week, it has pleasingly almost followed the share pattern identically. So here's the RSI down here. The movements in this part of the chart seem to resemble what's going on over here, like the fluctuations. This is a good sign for buyers of the stock, as this is known as convergence and means that the stock price is behaving correctly based on buy and sell patterns. If the opposite scenario was to emerge, i.e. divergence in the RSI, this could mean a change in the stock price is imminent because it has been behaving irrationally, according to RSI measures. Also, the fact that other than around opening rallies and yesterday's close, the RSI has generally stayed within the 30 to 70 range, meaning it hasn't been overbought or oversold in any great extent in these periods. So we have these little bumps at the start of trade, which have indicated being overbought slightly. There's a little instance there yesterday. And then generally yesterday did finish up above. Looking at the 12-month performance of the stock on this Google chart, there has been quite a lot of activity here. I want to point out two key events which have had an interesting impact on the share price. First, in January, there was a 3-for-1 reverse stock split. Basically, for every 3 shares out on the market, there would now only be 1. Mathematically, this triples the value of the stock. Secondly, in June, so around here, Exela Technologies had a $150 million equity raise to deleverage, i.e. reduce debt and fund future growth opportunities, perhaps most significantly by aiming to reduce the company's annual debt service costs by around $25 million a year. This move may have diluted the outstanding stock value to an extent, which is why there was this sharp dip following the equity raise. Interestingly, the total market cap is still less than the amount raised, though this would be due to the new shares not being included in the float just yet. The updated market cap figure could potentially send the markets either way when the shares become listed, even though it is just a mathematical proposition. Currently, Exela has approximately 60 million shares in total on the market. Some retail investors are playing for a bit of a short squeeze, and there is definitely a strong short interest, as indicated by the short volume that we've been seeing over here. Our most recent day's trade, which had extremely high volume overall, was made up of about 1/3 short trades, which is pretty crazy. The only problem for those looking to play a short squeeze is that at present the cost of borrowing shares is currently quite low compared to other heavily shorted shares, sitting at 29.74% per annum to borrow. To put that number in perspective, MRIN, another stock I've been covering on this channel a little bit lately, last week had a short borrowing cost as high as 210%. So this is obviously a lot cheaper for short sellers to hold on to than MRIN stock was or is. With an overview of the financials, we can see some weak figures posted here. A lot of this can be attributed to what would be a big slowdown in business due to the pandemic. While Exela boasts that they work with more than 40 of the top 100 companies in the world, in this period many businesses cancelled or put on hold projects as an austerity measure to control costs. This would definitely include upgrading to business process automation projects, i.e. Excela's core business. Generally, you would expect their fortunes to improve once other businesses begin properly operating. In fact, given much of the sentiment around people not wanting to work or seeking higher paid work, which has been dragging the US and global jobs data, one might expect the services of Exela to potentially experience a boom in demand of sorts in the near future. Looking at the most recent quarterly balance sheet data, the trend of increasing liabilities and stagnant assets has led to a deteriorating balance sheet that was definitely heightened by the pandemic. From December to March, the tangible share value did improve from negative $32.07 to negative $26.70 in March 2021. I suspect this figure will improve more when the next round of financial information comes out, given the equity raise putting a lot more cash on the books and reducing the liabilities. The equity raise alone would improve the total equity figure by making it negative $690 million. Also, while not shown here, the intangible assets have been declining for Exela, which can be a bit worrying for a software company. However, this is partly due to the aging existing offerings from Exela and their sale of Source HOV Tax for $40 million a year ago. I would expect a boost in this item with the coming online of their new email offering, which has sparked the recent share price rally. This would only further improve the company's level of equity, so while the most recent financials don't show it yet, there is likely to be a much better set of books on the horizon for Exela Technologies. Having a quick look at the scale of Exela Technologies, it is a large business that employs approximately 22,000 people. It has a really wide geographic spread with operations in more than 50 countries, and as I pointed out before, they already serve 40% of the top 100 companies in the world. So they are quite a big company, and perhaps their market cap doesn't necessarily reflect the actual scale of this operation. Historically, their share price has had a high of $21.39, which it hit in 2018. However, in the last 12 months, the high has only been $7.82 back in March of this year. And if you factor in that this is just after the reverse stock split, that was really worth $2.61 in the scheme of things. Also, in the pre-pandemic period, i.e. the year 2019, the share price experienced a pattern of decline where it started the year around the $11.22 mark and hit a low point of 98 cents, which it didn't get too much higher than by the end of the year. Another sort of negative issue for the company is that the sale of their accounting business in March last year for $40 million was sold at not an ideal time because it was in the middle of the pandemic. Potentially this move was to free up cash, which allowed them to keep moving through the year and help them survive that tough period last year. Looking at what we have seen so far, there has clearly been a lot of activity happening with Exela Technologies of late. The services Exela Technologies offer are wide-ranging and relevant today, giving the company good growth prospects. As their main market, the USA, has increasingly opened up, you would expect further boost to the company's revenues coming soon. The short interest in Exela is quite strong, and the cost to short is relatively cheap at the moment. So those who are potentially looking to play a bit of a short squeeze will need to be mindful of this and may need to actually dig in to hold on to the position for longer. It isn't so difficult for short sellers to hold positions at this stage. The stock price still has a lot of room to move up on a historical basis. However, it has been manipulated through recent stock splits and an equity raising, which is yet to release the new shares to the market. So it can be a little bit hard factoring what the true value of the share is at the moment. Like, really, overall, I would be cautious with this stock and keeping an eye out for how things improve with the next set of financial data, as this will give a clear indication on how Exela Technologies stacks up as being a longer term investment beyond the current short term trading and shorting frenzy that it has been experiencing. Anyway guys, that is it for me. I apologize about the lighting. The sun's sort of been setting through the window to my side as I've recorded this. I hope you enjoyed the video. If you did, I would encourage you to give it a like and consider subscribing to the channel for further trading updates. This is a great way that you can support a small and up and coming channel like mine. Until next time, I hope the markets behave in your favor. Take care team. See ya.